sorry to say, guys, but I told you so. Did I not tell you last week that I don't like messing with stocks that just went public, that just IPO'd? Well, in this video, we're going to break down ARM Holdings, do an update there, talk about how the stock's been doing, and we're going to go over some other stocks that went down massively after they IPO'd, and some of these might surprise you guys. They might surprise you. So we're going to jump into a bunch in this video. If y'all find value, you know what to do. Hit the like button. Make sure to subscribe. Follow me on Twitter at Stas Talk Stocks. Link down below. Make sure you guys go follow me. And with that being said, cheers. Let's dive into it. So you guys saw ARM Holdings went public last week, or was it? It was last week, right? Not the week before. Yeah, either way, they just went public, and there was a lot of hype around that company, that stock. Oh my God, they're going public, big company IPO. And the stock did very well in the beginning, right? You guys can see if I zoom in here, we opened up at around $55, whatever it was on that first day of trading, which was on the 14th of September. And then we ended up climbing all the way to about $63 by the end of that day. Then we got to about $70 on the 15th in the morning. And guys, it's been downhill ever since that point. This is why I always say, especially the first day of trading, literally the first day of trading for the stock, you got to be careful. We saw a lot of momentum, and sure, you can day trade and make money in these on the first day of trading, first couple of days. Obviously, they're not all the same, stocks that just went IPO, but, it's risky. Let's just say it's very risky buying on the first day and holding for a couple of weeks because we have lockup periods expiring, right? So that means essentially investors that were in early on, they can start selling off if they want. There's a lot of risk with that. And you guys can see, look, all that gain was pretty much wiped out. You guys see this? If I zoom in, again, we went from 55 to 70. That was a big move. $15 per share around. That's got to be 20%. What is that? 25, 30? Yeah, 30% move almost. And now we're right back to $55, guys. We're now down 22% from that $70 high. In other words, we're now in a bear market. Just like that, we are now in a bear market on ARM Holdings, not ARMS Holdings, ARM Holdings. I always say that wrong. But yeah, you got to be careful, guys. And that's not to say that we won't see another run. I mean, yes, we'll see another run for sure. We might go down to $50, 53, maybe run right back to 60, 65. Maybe we take 70 out. We could take 70 out. But ultimately, all I know is these IPO stocks, guys, very choppy. And you got to be careful, in the first couple of days, weeks, especially weeks and days of trading. And then I like looking at them a couple of months after they've been public. We've gotten some earnings reports out of the company, trading settled down a bit. That's when I like looking at IPO. So this one's lost pretty much all the gains, and who knows, it could be going down even more. Right now, when I'm making this video, it's down 8% when the overall stock market is doing fairly well right now, except for the Russell, which is down 0.3. Other than that, we have the NASDAQ up 0.3%, the S&P's up 0.25%, the Dow's up 0.2%. So everything's doing pretty decent today. But ARM Holdings, man, this thing is getting squash. And let me show you some other stocks, some other notable companies that went public and their stock price did not do well initially. Some of these you may know, like Meta. Have you guys heard of Meta, formerly known as Facebook? Yeah, believe it or not, when they went public, their stock got destroyed. I think it went down over 50%. From where it went IPO. Let me show you this. I think it was 2012. Yeah, 2012 they went IPO, and the stock was at around let's see, it peaked at 45. I don't even know what it IPO'd at, but either way, it was in May of 2012. It IPO'd, it got up to about 45, and then it got all the way down to 17 just about a couple months later. So each candle here represents a month. You guys see these, these candles here? Each one represents a month. So in May, we peaked at about 45, 46, whatever it was. And each month after that, for 4 months, we declined, right? We declined, and, we went from 45 to 30 to 25 to 17, and funny enough, $17 is the all-time low for Meta right now. And sure, we've seen a lot of splits, whatever, all that stuff's happened in the past decade, but split adjusted, Meta, the all-time low, $17.55, and now it's at $300 per share. Yeah, it's done very well, but not all of them do well, guys. Not all of them do well. And the point of this video is not to point out stocks that IPO'd and did very well. The point is to point out the fact that when companies initially IPO, a lot of the time their stocks get destroyed, right? Not always, but a lot of the time. And it all comes down to timing, right? When is this company going IPO? If it's going IPO in the middle of a bull market, when there's a lot of money going around, there's a lot, interest rates are low, that's completely different ball game than going IPO when rates are a lot higher, right? We're not in the best economy. We're not in the, strongest bull market ever, although some argue that we're still in a bull market. Whatever. You guys know what I mean. Timing's a big part of it as well. And I don't think now, and I mentioned this in the ARM Holdings video from a couple of days ago, I don't think now is a great time to go public for them. I think they should have done it years ago. Same with Instacart. I talked about that in the Instacart video. But look, the point is, Meta, they went public. The stock shot up to $45. Back then it was Facebook, obviously. There was a lot of hype. And then it got cut in half and some. So don't be surprised if ARM Holdings, I'm not saying for sure it's going to happen the same way. Obviously, we don't know what's going to happen. But don't be surprised if it gets hammered even more. We've seen it with company after company after company. Uber's another one. Look at Uber, guys. When they went public, let me zoom in and show you. And funny enough, the stock is pretty much right where it was at when it went public. But look, they went public at or in 2019, right? Yeah, that was not that long ago, guys. So they went public a couple years ago, and the company went public. The stock was at what, $40, $42, something like that, and then it went all the way down to $13, a couple months after they went public. So they went public in 2019, right? 2020 happened, so that was not a great time. That was pretty bad timing. But they went down to $13.70, and even before 2020 happened, and you guys know what happened early 2020. Even before that, the stock was downtrending. I mean, look, in the end of 2019, it was down at $25. It was just at $45 when it IPO'd. So that's another example. And look at it now. It's at $45, guys. It still has not really produced a positive return. If you bought on IPO day, you're pretty much break even 4 years later. That is not a good good sign for Uber. Sure, long term they could break out and go to 100 plus a share. Then the investment would be worth it. But right now it's not done well. And initially when they went public, boom, the stock got cut in half and some. Very big risk there. Another one that I've mentioned time and time again, I'll mention it again right now, is Rivian, guys, which Rivian, man, this is a extreme example, but they went public pretty much at the end of the bull market. Awful timing for them, right at the end of 2021 before the 2022 big dump we saw throughout the entire year. They went public. The stock was at 180. I was making videos back then screaming, be careful, be careful, be careful. And lo and behold, holy smokes, it went down to $11 per share. And initially when they went public, consolidated for a little bit. It held on to about 117, 15, $20. But that didn't last long at all. It shot to 180. We held 120 a little bit, 115. And then we just started going down like crazy to, 85. 50. Every month, this thing just got, chopped down and down and down even more to the point where it got to $11 a share, and now it's starting to find some ground, in the 20s. And I think Rivian's a great company. I think there's potential there. But this goes back to what I said before earlier in the video. My strategy is I don't like buying on the day of IPO, even if it's a company I love. I like giving it some time, let a couple months go by, a couple quarters go by. Let, early on investors sell out, let the market, let it kind of digest being a publicly traded company for a couple months, let it settle down a little bit, and then make a decision. That's kind of my philosophy with IPOs, and it's been like that for a while, and I don't plan on changing it anytime soon. So that's pretty much it for this video, guys. Let me know your thoughts in the comments. Let me know what you think. Hit the like button. Feel free to subscribe to the YouTube channel. It's free. I appreciate you guys. And guys, if you want some free stocks and you want to help out the channel, use that Moomoo link down below, or simply go to stocksurfast.com/Moomoo. Once you open up your account and fund it with your initial $100 deposit, you get 5 stocks right off the bat, and fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks, and fund it with at least $5,000, $1,000 for a limited time. You also get a free share of either Tesla stock or Google stock, which makes this promo a no-brainer. So get on it. Use that link down below. And with that being said, guys, cheers. I'll catch you guys in the next video.